Hey, we're recording this video after close trade Thursday, 19th February 2015. Hope you've had a good couple of days trading. So, nothing on the website for a couple of days, so I thought I'd do a little bit of a run-through video. Three things I want to talk about. Gold and silver, do that one last really quickly. I want to talk about where we are in terms of daily ranges, because there's some interesting stuff kind of going on there. And then intraday kind of trades. We had some nice little setups yesterday. FOMC day with the usual kind of shenanigans. Let me just roll through FOMC day for you. So FOMC day, the news comes out, the notes are released at 1 p.m. Chicago time, and I always say just trade the first 45 minutes, because after that it goes really quiet and you really don't get any kind of decent trending moves. And so that was the morning's trade. The first kind of 45 minutes we were in a really tight range on the 1500 tip bar chart. RAMBO patterns on 1500, I keep on saying this, RAMBO patterns on 1500 are really significant. You can get some great little trades off these. You'll see a bunch of RAMBO patterns on the 500 tip bar charts, but they're more significant. The higher time frames you go up, the more significant the signals are. So on 1500, when you see a bunch of RAMBO patterns going off, particularly in this kind of dead zone, don't go with them. Don't buy a potential breakout. That's what the amateurs are doing here. At 10:30 in the morning, you know, a couple of hours before the FOMC notes are released, they're looking for a trending move. They're trying to buy a breakout to new highs. It's not going to happen. And then it goes the other way, and all of a sudden, there's two things going on here. Firstly, they're getting stopped out of their trade because it's kind of going against them, and they put their stops a couple of points, 1.5 kind of points away. That's the first thing. The second thing is now they're kind of reversing and thinking we're going to go short and a breakdown to new lows. No, it doesn't happen again, so we kind of back off that and kind of go the other way. So you kind of wait a little bit of a while until the RAMBO pattern kind of plays itself out, but if you see a move kind of going against it like that, you can jump on board. So this is 1 p.m. This is the FOMC kind of comes out, all the shenanigans kind of go on here. We get blue professional exhaustion bars, bearish divergence, and we kind of rock the other way. And again, the RAMBO patterns on 1500 jump up. So they're looking at this thinking, well, we're going to break to new lows today, blah blah blah, kind of jump aboard. No, it's not got any kind of professional follow through to that move, and we back off that and kind of go to the other way and close those highs for the day. So overnight, the RAMBO patterns, careful of those, just because Pro-Am needs a little bit of time to recalibrate in the after hours. They are kind of valid, but I wouldn't trade on them in the after hours. You wait for the trades during the day. We had this, I don't know what was going on news-wise. I don't think this was around any kind of whatever the news releases were happening at 7. I'm in my bed at that time, so Hawaii time zone. It's like 3:30 in the morning, so I'm not up for that. But we get this huge kind of range kind of either ways. This is a really important number, 99, 2100, round numbers like that. 2100 is incredibly significant, and we backed off it a couple of times up to 99.5 up here first time. But we get this kind of sell-off. The pros aren't going to let the things sell off straight away from the after hours. They're going to game it up during the day and use the full liquidity of the market. Everybody's got to be at their desks. All the pros have got to take big positions. They're not going to let that move just collapse during the morning session without gaming it back up. And here are the amateurs again, going short first thing, expecting this thing to break to new lows. Well, no, gets caught. There's two bars here that are really significant. Okay, blue professional down bar, so they're buying it on that little spike, bang, kind of starts that trending move off. And then we have a little bit more here. Remember, the blue professional bars don't happen on this rise here. The professionals don't have resting sell orders ready to sell into that strength. They're picking it up on the retrace here. On the retrace, they come down, it pushes a little bit lower and bounces straight off that. As soon as we're breaking above this consolidation kind of zone here, above the highs, these blue professional bars, bang, we're going higher. You know that that's a good little signal here, the blue professional bar. We bank off that because we've got the RAMBO pattern in the background. Amateurs going short. The pros have bought that little dip because it breaks the highs and keeps on going. They buy that little dip, break the highs, keep going, bang, we're off to this move to the upside. So that for me was my best trade of the day. What was I doing? I was long 91.50 out at 96 for 4.5, which is a really nice trade. It went higher. I was getting out just at this RAMBO pattern blue professional bar. It went the full deal, pullback, end of trend, exhaustion, buying bearish divergence started to roll over, and then we've had this kind of move down where we can't get through this 2100 number. So remember those Rambo patterns, remember that kind of full liquidity of the day kind of comment I always talk about. Before a trend change, the pros are going to put that move in during the day. It's not going to just fall off from the get-go. What about this consolidation zone? We're in an incredibly tight range. For me, the two numbers that are absolutely critical are 2092 and 2100. So we're winding up and winding up. We've had very, very tight ranges, very small volumes, a lot of kind of churning going on, and I'll show you on these charts. We're wound up for a move, and I'm surprised 2100 has not been hit to the upside, because there's got to be lots of stops kind of sitting up there that would be really fun to game up through if they're going to kind of take it down after that. So I'm surprised we've had this exact double top here at 99.50, that they've not kind of pushed it up through there. Maybe they'll try tomorrow. Tomorrow's Friday. Fridays tend to be bullish, tends to be rangy. If we did break it up through 2100 and surprise a lot of people, they'd have to kind of jump on board, and potentially it could end up being a burst to the upside. But so far we have not, and so we've seen a lot of kind of consolidation activity under 2100, and so on the downside, for a downside break, 2092 would be an interesting number on the way down. I think something might be driven out of news events out of Europe, that might kind of force us kind of either way. So kind of wait and see. But let me show you this kind of coiling up activity on a couple of charts. So first of all, better volume, which is a kind of a nice free indicator. There's a whole bunch of blue professional bars here. Now, better volumes blue professional bars mean high volume churn. High volume churn is we get relatively high volume and relatively low range. And what that means is the range is being compressed because we have a lot of selling happening, usually at highs. If you see this on the bottom, on a lows, that's a lot of buying coming in at the lows, compressing, pushing up the low. If the high is being pushed down, it's because selling is coming in, compressing that range. So we've got a combination over the last 5 days: 3 high volume churn bars, 2 low volume bars kind of going on here. So that's really winding up. We're really winding up, compressing there in terms of what's happening. We've got cyclical resistance in due on the daily chart as well. It's kind of signaled on some of these daily charts, and so just wait for that. On the indices, we've got the same thing going on all the time. So this is the Dow chart, whole bunch of Rambo patterns, whole bunch of amateur bars kind of up here, and just look at these. This is what happens previously. Rambo, we kind of sell off. Rambo, we can break a little bit higher, but it does lead to some weakness afterwards. So whether we get a little bit of a jump up through this kind of 18,000 will be kind of key number on the Dow, and then kind of sell off like something like that, or do we happen over the next couple of days? I'm not sure, but those for me are those kind of key levels. This is S&P 500. Same thing, Rambo up here. You see Rambo at these highs. So we're getting into that zone where we're kind of finding it difficult to push through. Nasdaq's been super strong, but again, we've come into these Rambo patterns up here. So Rambo, all these things kind of going on. And here's the Russell, same deal, triple Rambo going on here. So you see Rambo. So just be careful. So just to see how this kind of turns out over the next couple of days. When I back it down to the daily chart, coming up with a 45-minute chart, there's that little cyclical resistance that's kind of printed in there with Rambo patterns on the Emini on a daily chart. It's also coming up to a pullback to end of trend on the 45-minute chart. So again, kind of topping out activity. I'd like to see more blue professional bars. If this was a real sell-off that was, the professionals taking a lot of profits at the highs, I still have a fairly bullish view on equities, kind of medium, longish term, but we could get a sell-off from this activity because it's being driven by the amateurs at these highs, scared into kind of a nice, really a deep sell-off from which the pros will step in again. I don't see this as professional profit taking at the highs in expectation of a trend change into the lows. All I'm seeing is this could run out of steam because it's all amateur activity and low volume activity at those highs that could lead to a short, sharp kind of sell-off from which the amateurs are scared out, the pros kind of step in, and we move back up to record highs. So that's what I'm kind of thinking is going on. Last couple of charts on here. This is oscillator trend. Not showed you the trend in a long time. The trend system has been regaining. We had kind of record highs last year in terms of equity curve, and then it dropped off quite nastily. But we're almost back up at those record highs. So it just shows the strength of systems if you kind of stick with them. Trend is showing negative. This is the better trend. This is the adjusted trend. Where I take the normal kind of trend numbers, swap them upside down, so negative trend values are real selling. So although the last couple of days have been up bars, up days, within there's quite a lot of weakness because the adjusted trend values are negative. Then valuation versus overbought, oversold. This is versus bonds, so this is the bond oscillator. TLT versus SPY, so equities versus bonds. We're overbought again. Overbought is colored with white bars up here. You can see overbought, oversold, overbought, oversold, oversold, overbought, oversold, and so on. So overbought at the moment. Same oscillator used with the yen for the carry trade. Yen versus equities, same deal. Oversold, overbought, oversold. We've got a little white bar up here just showing us kind of overbought at the moment on the oscillator. So what else have I got to show you? And the 40,500 tip bar chart. We've done pullback to end of trend. This is very similar to a 45-minute chart. Exhaustion buy, bearish divergence, pullback to end of trend, blue professional up bar, kind of over the last couple of 3 days on these highs here, finding it difficult to get through 2100. So there we go. That's kind of my view on this tight consolidation zone. 92 on the downside for a break could get quite nasty if we break 2092, but equally we could just go game some stops up above 2100. That kind of just sitting there. It's just be an easy kind of blow off trade. So just kind of wait and see. Just with these moves, just kind of wait and see and kind of take the signals intraday. But it's an interesting. We're coiled up. Basically, that's the story. And lastly, gold and silver. And I was saying gold and silver. We'd had a nice little pop. Daily chart here you can see versus the weekly chart, and we had all these blue professional bars kind of breaking out potentially into an uptrend. But I said wait. This kind of zone, these blue professional bars, as we come back in to test that zone, do the pros kind of step in? Do they hold it at those within that breakout zone and then push it up into a proper uptrend or not? And no, we did not have that. We've broken through the lows of that kind of zone, and so we're looking weak again on gold. We're going to have to go find retest this bottom and find the next kind of leg up. So it looks like the pros were using that to get out. The silver, similar type position here. Here it looks more like a U-turn. So daily chart versus the weekly chart. We've got blue professional up bars. They're kind of taking profits on the way up and then chasing it on the way down. And then we've got another blue professional bar on the way down here. If we break the lows of that over the next couple of days, on silver below kind of 16, that showed they were selling it down. And we're going to have to go test again back into this kind of 15 zone in order to find that support. This breakout zone, they did not hold it. We looked like we might kind of hold it a few days ago here, kind of coming back into it, but then we've broken down through that kind of low of that sequence there. So that whole sequence there was not enough to stop us on the downside. We don't have a confirmed breakout on gold and silver, so we're just going to have to go test those lows and see where they go. So there we go, coiled up like a spring. Let's look for that break, because it's going to be strong, either happening on Friday or Monday, I'd guess. And then just look for good little intraday trades, and hope your trading is going well.